Hi, everyone. Welcome to Les Maisons Partners YouTube channel. And today we have an incredible guest that we can't wait to talk to. If you need to get some smart money moves and to get your money moves together, this is the one you are really going to need to tune into and to really listen to, because this is going to be the investment strategy guru that you need to talk to. So, Tony, thank you so much for joining us. We want to talk to Tony Fleurival. He is going to tell us all about how we can invest in some complicated times. So I'm going to let Tony talk a little bit more about himself.
All right. Thank you, Nasya. Thank you for that warm, beautiful, incredible welcome. Appreciate it. You are doing amazing things yourself, so I'm just very grateful to have the opportunity to come and contribute on your platform as well. So my name is Anthony Fleurival. I've been in the financial industry for over 10 years. Started off by graduating from Boston College School of Management in 2006 in a degree in business management. And I've spent a number of years in the finance industry, and then ended up at Morgan Stanley for a number of years working as a financial advisor for high net worth individuals for retirement planning. Eventually, I realized that corporate America wasn't exactly for me, and I transitioned to opening and starting my own consulting practice. And through years of, entrepreneurships and networking, I started helping startups build their financial portfolios, nonprofits. And currently I serve on a number of boards for different nonprofits. And I'm also currently serving as CFO of a medium-sized psychotherapy business. And, I still have a lot of people I help with individual investments as well. And, just really about educating and empowering specifically Haitian Americans and minorities, but definitely anyone nationwide, worldwide, with whatever I can offer to help, especially in these times, in this crisis.
I'm not sure exactly how you have time to even eat with all of that you're doing, but we appreciate you coming.
Yeah, the social life isn't the greatest. However, I'm very passionate about what I do, and, empowering people is so much more valuable to me than, food actually is good sometimes too.
So I know that especially in these times of COVID-19, people are really having the chance to sit down and to really look at what their financial and retirement and investment goals are. And I know that there are people who just don't know where to start. Like, where do you start when you're looking at your investment goals? And then also, how do you couple that kind of with your financial goals?
Well, that's an excellent question because, the reality of the situation is that our school systems don't necessarily focus on financial education and, managing money and, simple things about credit and, buying a house. Anything financially is really something you have to really go on a hunt and figure out yourself. So I want to keep it like as basic as I possibly can. And the first thing you really want to do is just create a budget. Now, sometimes when you hear budget, you get a little bit nervous and you're like, oh, what do I do? Where do I start? But realistically, it's just, managing to figure out how much you're making, what's your primary source of income, and figuring out your consistent expenses, and really just trying to line that up on a month-to-month basis and really be clear in understanding where you have some slack, where you can save some money, and where you can create some growth financially in that department. The next thing is education. And again, the tools for the education isn't necessarily something that is just available to everybody, but you do have to, be willing to go out and hunt and do different things. There's a number of books I could suggest. Starting from a stock perspective is like One Up on Wall Street by Peter Lynch, was something that was instrumental in my life. The Intelligent Investor by Benjamin Graham, Little Book of Common Sense by Jack Bogles, Ray Dalio's Principles, Little Book of Valuation by Oswald de Mondrian, and Warren Buffett's annual report to his shareholders is another really, really good source of information to just give you some, common knowledge about investing and, what he's looking at and what matters to him and valuating companies and things of that nature. So reading might not necessarily be your thing as well. So there's a number of YouTube. There's a lot of content on YouTube with these individuals that explain things in great detail that I would definitely invest the time in learning about as well, because the education piece is the piece that I will hammer home more than anything else, because a lot of the time in the finance industry, it's designed to take advantage of people who don't want to educate themselves. And that's how they kind of get feed and get, kind of taken advantage of in those situations.
Well, we definitely that happen. We want to own our own wealth, so that's the number one thing. And I know we've had clients. Sorry, a little bit back here. We've got clients who have asked us, what is the best age to begin investment planning? If I'm close to retirement age, is it too late?
Well, that's another really, really good question, because this is another, invisible limit that people put on themselves when, considering learning about investment. And really, there is no age. Warren Buffett actually started investing at the age of 11 with guidance from his father. And although we don't all have that luxury of being able to have our father tell us what to do at such an early age, the earlier, really, the better. And one thing I failed to mention as far as, where to start is also just developing a goal. It could be a financial goal, like I want to make X amount of money, or it could just be a goal for strategy. Like I want to invest $500 a month for 10 years straight and let that compound. And also, if I use any terms that you're not familiar with, please use Investopedia. It will define anything, any words used in the stock market and anything financially. So that's a very useful tool as well. But back to the question about when to start. Like I said, the earlier, the better. But as far as, what's best for like an older investor versus a younger investor, it really depends on the risk tolerance. And so like if I'm, between the ages of 21 and 35, I have a really, I have really no risk as far as what type of vehicles I can invest in. I can invest in like stocks, which tend to be a little bit more riskier because I have a way bigger time horizon to maximize my gains. Versus if I'm an older investor, I have, not much risk. I can't risk investing in things that could potentially go bankrupt or potentially lose money for me. So I would have to stay in things that are highly liquid, where I could access the cash quickly and that, have very little risk involved, like bonds or something like that.
Okay, that makes a lot of sense. I think another thing that we have had our clients ask us all the time is somebody will say to us, well, and even me talking to friends will say, well, I've got a 401k or I've got an IRA, so I'm all set. I can now retire and just let whoever the administrator is take care of it for me. How do you feel about counseling people as to, is that really all you need?
So I mean, those are actually useful tools for creating retirement savings, but them in itself is not enough. So if your company matches for 401k and they'll actually pay you money to invest in your 401k, definitely take full advantage of that and match it. But it comes back to the budgeting and the education piece that we were talking about before, because if you apply the same discipline in your own brokerage account, you can cut out a significant amount of fees as well as withdrawal penalties. Not to mention, average 401k balances tend to be relatively low in terms of like retirement planning. I have a graph that shows about from the ages of 25 to 34, the average balance is around 21,000. 35 to 44 is around 61,000. 45 to 54 is around 115,000. 55 to 64 is around 171,000, and then 65 plus is around 192,000. And unfortunately, even though it's great to have those things in place, retiring on that amount of money on a fixed income is, not realistic, really. And so having other investment vehicles to counteract that is definitely the way to go. And, when you have a budget and you're clear about, how much you're able to invest and how much you're able to spend on a month-to-month basis, it really gives you the freedom to really, invest in, whether it's real estate, whether it's stocks, bonds, commodities, properties, different things that will grow in value as opposed to depreciate in value.
Yeah, I think for a lot of people, they feel like, okay, now is a very complicated and complex time. Let me get started, if I haven't already, and try to build up at least a little bit of a nest egg in order to help me in retirement, but also now, because I think a lot of people don't realize that a lot of what we're building as far as wealth is to help you in situations such as this. So I don't know if you've come across that where somebody has actually been able to use what they have built up in order to help them out in situations such as this, in case somebody gets unemployed or if they have a sickness. How do you plan for that?
Well, there's certain instances where like 401k will have a couple of criteria where you can withdraw money without being penalized, but it's few and far between. I believe first time home buyers one and things of that nature. However, in certain situations like this, like unemployment is not one of those criterias. A pandemic is not one of those criterias. So there's definitely parts of the planning process, like estate planning, like insurances, that are also very necessary as far as the financial planning goes. But just maintaining and having a savings account for emergencies is something that right now is like seeming like one of the most important things to do as far as the financial planning aspect. And so that doesn't necessarily tie into one of the vehicles, but being able to have that discipline and, creating a plan around that and having a support around that will, make times like these much more easier to deal with.
That's a good point. And I think a lot of people would rather leave this in the hands of the professionals like you because they find it a little bit complicated. And I'm glad that you kind of level set and gave us some tools and resources that people can actually look through and kind of research on their own. But once they decide that they do want to move on to a financial professional, an investment professional that can really guide them and really get the most efficiencies out of their accounts and out and really help them to maximize their goals. So what exactly should people be looking for when they're trying to find a professional to help them through this situation?
Right. And that's an excellent question, which I don't think enough people honestly focus on when looking for help. They more so are in need and just react versus actually doing some research on finding a reputable company to get behind, a reputable advisor to get behind. And truthfully, experience matters in this business more so. I mean, experience matters in every business, right? Like we want, experienced, knowledgeable people running whatever we hire them to do. However, in the financial markets, so much has happened. So many risks are on the table that, having somebody who's been in the industry for, you know, decades, if not a number of decades, is definitely valuable in itself. Having somebody who has certain designations like CFP or CFA, just highlight a more focused and intense knowledge base, you know, which could make the difference between 5% annual return versus a 7% annual return. And although it's just 2 percentage points, that makes a huge difference 10 years, 20 years down the line. And so having somebody that's really, really knowledgeable in those terms can make all the difference. And also, you know, there is an emotional component of it as well. So just being able to speak with the person and get familiar with the person and really talk to a person who will listen to your situation and craft a plan based on your specific goals and needs is huge, because a lot of the times in the industry that, you know, people just kind of hand over their assets blindly and hand over their money blindly to a certain degree. And, you know, it allows the advisor, the person managing the funds, to kind of like do what they want to do and how they want to do it. And, you know, not necessarily invest for that person's risk tolerance. You know, they might be young, but they might, you know, really not want to, you know, take massive risks and only invest in stocks and equities and things of that nature. So that is also something very important too. And also somebody who will diversify your portfolio so that you have exposure to multiple markets and multiple different investment streams, so that, you know, a lag in the market, in one market or in one sector, is not going to pull down your entire portfolio. For example, even though we are in a pandemic, there are certain companies that are absolutely thriving right now. Like, you know, Zoom, we were talking about Zoom. I mean, it's thriving in this environment because everybody is, you know, adapting to the new normal, and, you know, video conferencing is huge. And, you know, the Googles and the Facebooks of the world and the tech companies are actually, you know, in a really, really good position to thrive right now. And, you know, having somebody who is kind of has their feet to the ground and understands the times and how they're changing and is willing to adapt is also very valuable.
That is good. We want to make sure that we're tapping into the right resources in order to get the most out of our money, because that we have to come back to the fact that it is our money. So, I mean, this has been great. I think I would like to know, like, your top 3 tips for people when they're going to start planning with their investment planning. What should we know? What are some of the most important things that we should know? Top 3.
All right. And I don't want to sound repetitive, but the value of creating and understanding your own budget will literally set you apart from so many people who are just living day to day and going through the motions. That puts you in position to do some serious goal setting and to like really understand what you want to do with your money, how you're going to build it, and come up with plans in order to do so. Without the foundation of your budget and understanding that, it can't happen. Second is obviously setting goals and educating yourselves on value-adding investments. Can't understate that enough. The education piece is crucial. This is what allows you to really not get taken advantage of. And, you know, we live in a capitalist society and people are trying to profit left and right, and nothing wrong with that. That's what makes this country great. However, being educated just puts you in a position of power where you're actually able to influence how your resources get used. So I cannot understate that enough. And then lastly, I would say building a team around you of like-minded individuals with goals and principles that align with yours. Now, this is something that, you know, can be stated in a number of different endeavors. However, when it comes to money and when it comes to finances, there's so little education around it that surrounding yourself with people with knowledge, surrounding yourself with the real estate professionals, surrounding yourself with stock investment professionals, just surrounding yourself with commodities professionals or collectibles professionals, whether it's paintings or action figures, whatever it is. Just aligning yourselves with people who have professional experience or high knowledge bases in different things that you're trying to align yourself with is very valuable.
Well, that's great. Um, I think that really covered it all. If somebody has a question, we are going to make sure that we put Tony's information in all the descriptions of on our YouTube channel. But he can also be reached on LinkedIn as well. Correct,
Correct.
Tony?
Yes.
So, and just under Anthony Fleurival.
Correct.
Yes, perfect. We know we'll probably have lots of questions after.
No
So,
worries. I will be available for anybody who has questions because at the end of the day, is being able to feed the information to everyone is what is the most valuable.
and also like what you said about surrounding yourself by people who will kind of be that support system, who will be those professionals, because I really think that one of the things that I would love to do, I had talked about it earlier, but to do something with my family members and to kind of get together and begin to invest together. And so I think a lot of people are going down that road now. Either it's with colleagues or friends or with their family members themselves, because I think collectively you can have a little bit more flex and a little bit more strength. You can ask for those funds that you would like to see. Especially in these times, a lot of people are looking for socially conscious and environmentally conscious kind of funds. So I think these are great tips, and it's a good thing for people who are still kind of wondering, how do I start? Do I have enough? Because I can tell you that every time I look to see how much I'm going to need in retirement, I don't have that.
Not many people do.
Right?
Not many people do. And that's the harsh reality of, the world we live in. But, it's people like you who are, taking the initiative to put things together like this to give people not only hope, but actual steps and actual a path to retirement and a path to financial freedom, which is, it sounds great, but unless people are actually taking actions and showing you the way, then it's very, very hard to come by. And lastly, I just want to say, as far as your comment, a huge thing also that creates, as far as building a team and people, is accountability. And on your own, like, it's hard to be disciplined. I mean, we could talk about like going to the gym, you know what I mean? Like something as simple as that, can be very difficult. But when there's a group of people all working towards the same thing, you don't want to let this person down, and you want to make sure you do your part to support this person. It definitely can make all the difference as well.
Okay, well, you heard it from the expert. So we will say goodbye until next time. Thank you. Make sure you like and subscribe. All right. Bye.
Bye.